With less than 2 months to go until the US presidential election, should you make changes to your 401k or the rest of your investment portfolio? The quick answer is no. You shouldn't make changes to your investment portfolio just because it's an election year. Especially leading up to the election, you might have this feeling or maybe this gut reaction that, hey, something's going to happen. Now's the time to make changes. I want to make the point today that if you have a well-built financial plan that has the long term in mind, the election is just noise. I know it might not feel that way, especially this year with so much going on in the US and the world economy. It can feel like it's different. But I want to make the point that those words, "it's different this time," can be some of the most dangerous words to make a decision off of, especially when it comes to your portfolio. With the upcoming election, a lot of people have been asking me, Alan, should we make changes? Should I adjust something in my 401k since the election is so close? And the answer is no. You shouldn't make any big changes to your investment plan because it's an election year. And also, 2020 has been crazy, to say the least. We're still dealing with the pandemic. The social unrest across the country right now is making headlines, and then the presidential election, as we get closer to it, is just going to really, really be in your face. With all that said, you don't need to make changes to your portfolio. You don't need to make an adjustment to your asset allocation. What you need to focus on is make sure that you're investing with the long term in mind. Now, of course, all that said, anytime that we're talking about an investment portfolio, I'm talking about your long-term investments. I'm talking about your retirement plan. So if you've got a short-term goal, if you're looking to buy a house in the next 30 to 60 days, or if you've got an emergency reserve set aside that you're like, maybe I should get this invested, those kind of things should stay in relatively very short-term investments or cash. I'm talking about your 401k, I'm talking about your IRA, I'm talking about all the different investments that you have in place to help you enjoy life after retirement. Whenever we're going through a big change in the market, especially around a big event, the market does not like uncertainty. And right now we're experiencing a lot of volatility in the market, and that's normal. This is something that we do see during an election year, is volatility tends to go up. It might feel like this year more than ever, but really just keep in mind that there's a lot of headlines coming from either end of the political spectrum in terms of why you should be thinking one way or the other. History has shown that on average, during an election year and the year after an election year, that the markets do move up. So this isn't a prediction. I'm not saying that I've got the crystal ball that says exactly what's going to happen leading up to this election or afterwards. All I'm saying is make sure you have a plan in place so that you can weather the ups and the downs. Ultimately, having the diversified portfolio, that's a huge piece of the puzzle when it comes to riding out the volatility. If you're trying to make a bet on one particular asset class, or if you're trying to time it just right with a certain stock or a company that you feel really strongly about, that's when the risk just goes through the roof. And it doesn't matter that it's an election year. It doesn't matter that we're going through this pandemic. Anytime that you're concentrating risk in your portfolio, that's a recipe for disaster. All right, so the way that the markets work is they're always trying to figure out what's about to happen. And in other words, that markets don't like uncertainty. Leading up to the election, believe it or not, right now it's September. We've still got a couple of months until Election Day. The markets are trying to price in what's going to happen. This does increase the volatility, but this doesn't mean you need to make a change. Sometimes the best advice with everything going on is just to stand still, take a breath, and then evaluate your portfolio. So that's the first thing I want to talk about. Number one, it's normal for markets to be volatile. I think I said that before, but just remember there's so many things at play right now, not just the election. A lot of times when there is a big event on the calendar in the future, we tend to see everything through that lens, where if we make a change in our portfolio, it's because of this thing that's happening in a couple of months. Well, that is not going to help you out in the short term or in the long term, because there's no way to time what the markets are going to do. There's no way to figure out exactly how the market's going to react. What you do have to keep in mind is your goals, and that is the essence of goal-based financial planning. You have to build out your financial plan based on your timeline, based on what you want to achieve. Again, I'm talking about long-term goals. I'm talking about retirement planning, not if you're looking to buy a house in the next couple of months, or if you've got some short-term cash need in the near future. Volatility means there's going to be a lot of market movements. It's going to move up, it's going to move down. if you've got the long term in mind, it's going to feel like a smooth ride, but really it does go like this over time. The market doesn't like surprises. So if you think about it, the market knows one of two things is going to happen in November. There's not a lot of wild cards that can be thrown into the mix in terms of, hey, what's going to happen? It's going to be one of these two things. What the market hates is surprise. It hates it when something happens that's unexpected. So again, just pointing to the election, we can figure out the variables pretty easy, and just keep in mind that all the other things that are going on in the US, that's affecting the volatility right now as well. Again, it might feel like you need to make a move, you need to make a change in your portfolio, but the reality is, if we're looking at the long term, it's better just to stay the course. Going through all this volatility, it can be easier said than done. It's important to stay grounded. It's important to have perspective right now. And I believe that it's really helpful for you to have a conversation, a third-party objective person that can really look at everything without that emotional lens or without that political lens. So if you have questions around your financial plan, or if you want to put together a financial plan, of course, don't hesitate to reach out. You can send me a message. I'm going to put my email down below. Feel free to shoot me an email, and we can set up a time to talk. With everything that's going on right now, it can just help sometimes to talk through it, and I'm happy to do that with you. So just real quick, my name is Alan Hensley. I'm a financial advisor here in Seattle, Washington, and if you have any questions around your financial plan, what the elections mean for the markets, let's talk. Don't hesitate to reach out, send me a message, send me an email. Let's find a time to chat on the phone or over Zoom. I'm happy to do whatever works best for you. Thanks, guys. Hope you find this information helpful, and of course, I hope you're having a good day. Thanks so much.